Hey everyone, this is Rick with Hit and Run Candlesticks. Today is October 15th, Thursday, October 15th, and we are in the live trading room intraday here, and a few things I want to go over. Okay, now let's get to Mel's question. So Mel's asking, what would your target be on the blue ice failure of the SPY? And the blue ice failure on the SPY is the exact opposite of the rounded bottom breakout bullish trade that we trade. So I treat it exactly the same, but upside down. So, and I'm saying this because a lot of you already have the ebook, you've already studied the rounded bottom breakout, you already know about it. So I'm just giving you a heads up that it's pretty much the same thing, just backwards. So let's first look at the blue ice failure here. We've got this is the 50 period moving average right there, by the way. And that's the blue ice. So here we have a rally up, and here we've pulled back all the way to here, and then we gap down on this particular chart. We gap down, and you can see we're trying to climb up. So now what we're looking for is a sell signal up here, or a reason to short it, and doesn't have to be a sell signal. Everybody might be a little bit different. When we get into that short, what I'm looking for, my target direction. Okay, now I'm going to say that again, target direction. I want the takeaway word is direction, not target. Okay, target direction is the 200 period moving average, which is the solid line, or the dotted deuce, which is the dotted red line here. Both the 200 period moving average, except the dotted deuce is just arranged a little bit different. So as far as the short goes, this would be my trade setup. So I would, well, let's just say an entry in this area, and then I would be looking for a direction in this area right here. So this gives us the possibility of something in the neighborhood of 2.4% maybe. Now that doesn't seem like a lot, but remember, we're only working on an hourly chart here. That's it. We're not working on a daily chart. We're looking, totally different type of trade. Kind of an intraday setup is what it is. And besides, if you trade an option on this, a put, what will happen is that 2 to 2.5% will turn into 5, 7, 8, maybe. 10% will be a stretch, but it's possible. So that makes the trade very well worth it to me. Now, don't get me wrong. I'm not going into this. I'm not going to short it. Not just yet, anyway. So anyway, Mel, that is how I would look at the target for the blue ice failure. It's always failing the 50, and my target direction is always the 200. The only other way you would change that is if the chart was already in a downtrend and you weren't using this type of setup here, rally up and back. Where you're actually in a downtrend. Let me draw this out. So you're in a downtrend, and maybe we rally back up to the 50-day period moving average, and then it fails up here and then continues down like that. That answer all your questions there, sir? Appreciate it. Hello again, everybody. The recorder's back on. What I would like to do, and I have no idea how long this is going to take, because I'm also going to take questions from everybody here in the room if you have questions on what I'm going to talk about. But on our YouTube channel and our Facebook and our Twitter channel, I get asked questions all the time. And I've got a few here that I would like to answer via video. There's no way in the world you can type some of these answers out. What it will do is create this back and forth and never get the meaning across. So I think this is a great way to do it, is maybe answer the questions via video, post it back on YouTube, and then maybe that gets those answers for the people that was looking for it, and maybe it helps other folks that might be looking at it. So I took some notes here on a couple of them, and bear with me. I can't read my writing half the time. A guy named Tony asked, why am I using the 3-bar chart? Another person, and I didn't catch their name, I forgot to write it down. What is the 3-bar chart? So let me explain that just a little bit. And I want to go to the SPY, because we've been using the 3-bar chart on the SPY here for a little bit. Last few days, and let's just go to a naked chart. There we go. I'll get it figured out here in a minute. Just started this today. So what is the 3-bar chart? Well, the 3-bar chart is breaking a day down, or breaking a candle down, one candle. That's one day. That's breaking it down into 3 pieces. 3 equal pieces, just like that. Close. Okay, that's what it does. So if we look at the current chart, and right now it's 1:40, 1:36 in the afternoon East Coast time. If we let's go to the daily chart. This is today's candle right here. If we go to the 3-bar chart, this is the first candle of this morning, or the first third. This is the second third, and we're still waiting for the third, the last candle to show up. So for instance, if we go look at yesterday, for instance, this is the last candle for yesterday, the second candle, and the first candle. The day before, the third candle, second candle, first candle. Now, with candlesticks really should not be overthought. They are about the easiest thing in the world to understand. They're very clean. They make all the sense in the world when you realize that all they are is votes. That's all it is. All a candlestick signal is or a candle. All it is a vote. That's all it is. Let's take this candle here. If there were 100 people that were trading, that's it. 100 people in the world. And that's all the stock market there was. Only traders out there. Would you say that for the most part, 100 people voted that this was down? If there was 100 people, how many people to make a doji? Would you say 50% of the people were bullish, 50% were bearish, and that created a doji? It makes sense to me. If we look at this candle, this combination right here, and this is a day, and then this is a day, 1, 2, 3. This is a day, 1, 2, 3. So if we look at this combination, we finish this day, would you say that 100% of the vote was up? I would. Candlesticks are very, very easy to figure out. I would say that the majority, or even 100% of the traders, still suggested that this chart is bullish, and here they are up. All of a sudden, what happened to the votes? Not so many bullish people here, are there? All of a sudden, we've got votes voting down, voting down, voting down, voting down, voting down, voting down. So, say the third day of yesterday's candle here, a doji here. If we put a line about the middle of the previous bar, which is this candle right here, for me to be bullish, I would have to see this candle show me that a certain number of those 100 traders are bullish, and it would have to be above this line here. Let's probably should change that green, shouldn't I? So yesterday's last candle needed to close up here, above 50% of this candle. If this was 100 traders only, okay, think of it that way. How can you possibly get your mind around, 1 billion traders out there? I can't. So just think of this as 100. And if the middle would be 50%, 50 traders, I need this to close up so that I can see that the majority of these traders, because here's where the low is, the majority of these traders are voting up. Okay? Now, yesterday at the close, I did say that, sorry guys, but I'm not feeling so bullish on this. I'm thinking we're going to see a lower low tomorrow, and today is tomorrow. And that's the reason I did that. Now, I could have been wrong. You know, we gapped down. We could have just as easily gapped up. But what we trade with is probabilities. That's what trading is about. It's about probabilities. So you want to stack your probabilities in your favor. You will be wrong sometimes. It's a fact of trading. But if you put the probabilities in your favor more times than not, you'll come out a winner at the end of your day, your week, your year, your month, however you count it. Okay, so the 3-bar chart is just simply breaking down the daily chart into 3 equal parts. Now, I use TC2000 here. I happen to think TC2000 is about the best charting package in the world. And it's really easy to work with. Be glad to help anybody set something up if you need. I use the 130-minute, and that breaks it down to equal parts. So a 130-minute chart breaks it down to 3-bar chart. So that's what the 3-bar chart is. Now here's the second part of his, well, here's the other guy, Tony. Tony is asking, let's see, why are you using the 3-bar chart? Oh, okay, here. I already answered part of it. The breakdown on the daily chart, I've already answered that part. Another answer that I want to give is it's much cleaner. Look, I think most swing traders use a daily chart. Not 100%, but I think most swing traders use a daily chart. And I think what happens is the swing traders that use a daily chart, they also go down to a 15-minute or maybe a 5-minute chart, something like that, 15-minute chart, something like that. Now, I want you to take a look at this chart. Just take a look. Just take a gander at that chart for a second. Now take another gander at the 5-minute chart. Look at that. Now I want you to look at the 3-bar chart. Isn't that so much cleaner? Isn't that so much easier to work with? I rarely, well, I could go 6 months and never look at a 5-minute chart. I do look at a 15-minute chart, mostly when I'm looking at the SPY or an indice, and we're trying to dissect what that indice is trying to do. Also, the VXX that I trade, I'll also look at the 15-minute there. Outside of that, it's almost always a daily chart. And I'll bump down to look at this 3-bar chart, and every now and then the hourly chart. I like the hourly chart as well. But when it comes down to cleanliness and organization, and the ability to read what today's candle is doing. What is today's candle doing? Let me make a note here because I want to make sure we go look at BYD when the third candle shows up, which I think it's a few minutes. So right now, today's candle, we're down. And what do we need to see on candlestick signals? We want follow through, or what I call stacking. Is the second candle stacking? That's pretty bullish, isn't it? That's so far a very nice chart. Now we're waiting for the third candle to move up or show up. We're waiting for that to see what it does. Let's just, for the sake of this chart and for conversation, remember we still need to break out of this trend. Doesn't matter what these candles do. We need to break out of this trend. Now, it's very possible the third candle does it for us. Very possible. We'll see. We'll see. So, kind of to recap that a little bit, I think the 3-bar chart is cleaner. I think it makes more sense. I think you can read it better than reading a 5-minute chart or a 15-minute chart. Anyway, give it a shot. See what you think. Give it a day or 2 days. Just peek at a 130-minute or 3-bar chart. I wouldn't peek at it for 5 minutes and then say, "Oh man, this is making my eyes go dizzy," because you have to get used to it and bounce back and forth between the 3-bar chart and the daily, and you'll start seeing how you can figure out what that candle means. What did this candle do right here? What did that candle do? Go back to that. Go back to that chart, 3-bar chart. There we are. What did that candle do? Up, up. Uh-oh, we have a problem, don't we? So we know now. Here, let's get rid of all this. We're going to put another one up. So if we ended up with this candle, because this is the first bar, there's the second bar, this is the third bar. It's very easy to trade. Very, very easy. We're going to put a line right there, and we're going to put a line up here, right there. Now, all we've got to do is watch what price does on the very next bar. In this case, it's the next day. So are we going to move up? That makes this bullish. Or are we going to break down to the downside? And that makes it bearish right there. So very easy to do, very clean. You don't have to look at it every 5 minutes. You can't, you have time to go eat a sandwich if you want. Take your dog for a walk. Relax a little bit just by watching that 3-bar chart. It tells you everything under the sun you need to know. And it's just so much cleaner. So anyway, that answers Tony's question and somebody else's that I just couldn't, I didn't write their name down, so I couldn't do much there. So I'm going to ask, is there any questions on this? All right, so see, Bob is asking, so with stacking, are you looking to take out the high of the previous candle or above the body? Bob, I think you have to have a mixture of each one. Sometimes I look at the highs and sometimes I look at the bodies. It really all depends on the chart and the way the price action is kind of working, and the the candles coming up. What are the candles coming up? Like right here. What do these candles look like? How I'm going to do this? I think I can safely say for me, I mostly use the body, but you could certainly do this if you wanted. You certainly can. I'm more of a body type person because Wicks is nothing but wishy-washy traders. That's all it is. Wishy-washy traders. Wannabe traders. Traders that are nickel-diming everything to death. They don't count. I don't think Wick traders count. So I'm more of a body kind of person. But that doesn't mean you can't watch the Wick. And I do watch the Wick sometimes. So I think you have to develop a balance between the two. Good question, Bob. Thank you. Let's see, Nina is asking, do you set the trap on the 3-bar chart or the daily chart, and does it make a difference? Nina, one of the next questions I have from a guy named Andy is, what is the 3/8 trap? So I'll talk about that, but I do want to answer your question here really quick. You can set the 3/8 trap up in any time frame you want. Any time frame. 1 minute time frame if you want. What you're looking for is price to be trapped between the T line, the 8 exponential moving average, and the 3 exponential moving average. You're looking for that trap, that price in there. You're looking for, the price to be up and pulling back to it. And again, it could be on any time frame. Okay, so hey, the 3-bar chart just popped in with the last bar of the day, right in here on the SPY. You can see that. So what we'll do is keep an eye on that for the rest of the day. and see how we finish up. I'll come back to this chart later on, and we'll take a look at that. Okay. Let's see. And like I say, I'll be talking more about the 3/8 trap here in a moment. Let's see, Tom. Any drawbacks to using a 2-hour chart? Thinkorswim does not have a 30-minute chart that I'm aware of. If anyone knows how to set that up, please let me know. Tom, I would be shocked. I would be absolutely shocked if Thinkorswim did not have a 130-minute bar, if you couldn't create it. Thinkorswim is probably one of the most powerful platforms out there, and I mean, I have nothing but good things to say about Thinkorswim. Now, I don't use it, but I think it's a top-notch, super platform, and I just would be shocked if they didn't have a 130-minute chart. Absolutely. So you're asking, are there any drawbacks to using a 2-hour chart? No, it just makes more candles for that day. That's all. You're trying to break the daily candle down, and and what it'll do is it give you an early edge on it as well. So that's all you're trying to do. But I honestly feel that Thinkorswim has that. Joe's asking, how do I add tabs to the bottom of your chart? Joe, you should have, it might be hard for you to see. See that little white thing with a little orange corner in it, new tab layout? If you click on that, you can add a tab. Kayan saying you can customize that 30-minute chart. Thanks, Kayan. Appreciate it. Thanks, Terry. Let's see, Earl, my chart does not have a 3-bar chart for the 3-day chart. Can it be expressed in minutes? Earl, I'm not sure what platform you use. All you're doing is you're taking, if you can look at a weekly chart or a 15-minute chart, I'm pretty confident you can come up with a 3-day chart. There may be some coding involved, but I'm pretty sure that can happen, okay? Let's see, get down to some of these questions. Let's see, Terry saying, hi, Rick, I really appreciate you inviting me to your platform. I enjoy your trade techniques and hearing it over and over. So helpful. You're very welcome. In regards to your option trades, I understand, okay, you're asking an options question here. Okay. You understand that I look for 50 days out, like open interest and delta. It seems at times the strike is lower than the current price and the number of shares. P.S. TOS will let you add. Okay. Yeah, Terry, let's see here. Let me look at AMAT real quick. I want something more in a trap, so let's take lows. All right, let's take lows for an example. Let me bring down my, here we go. All right, so let's take lows in here. Low, there we go. So you're right, I look for 50 days out or plus. So I mean I can make this longer and go look way out here, but we're just going to look at December right now. Okay, and I look for open interest, which evidently there's none there. That can't be right, can it? Is it possible? Huh. All right. Maybe that's true, and maybe that's something with Trade Hawk here. I don't know. So let's go to January, and you can see there's ample in here. And what I'm going to do is I'm going to go to a 70, close to a 70 delta. So let's change this a little bit. There we go. We'll change that to yellow. There we go. So I might look at this 73 or 68 delta. Then I'm going to come over here, and those are the two strike prices I might buy. Either one, I'm not, either one is good. I'm not favoring one or the other. They're both good. Now, and what'd you say here? The strike price is lower than the current price, and that's okay. That's not something I ever concern myself about. All I'm concerned about is going out 50 days. That gives me plenty time to be right about my trade. It also keeps the curve of all the Greeks coming in and getting their pennies, their share. Pulling the curve of drawdown. If you come over here and you buy a November, the curve might be something like that. If I buy a January, the curve maybe is like this. So I would rather have more time before we start getting into that nickel diming me to death. So all I look for, again, is I go out 50 days plus, and it can be 100 days, and I want that open interest, and I want the delta. So I want delta to be around 70, and I want the open interest to be at least 20 times of what I'm going to share. That is the only thing I look at. Absolutely the only thing that I look at. I hope that answered your question there. Hope it did. If not, we'll talk about it again. Let me put this back up here. There we go. Let's see here. Okay. All right, let's talk about the 3/8 trap. Andy's asking, what is the 3/8 trap? For everybody here in the room, and I'll post it in this video as well. There's something I want to share with you, and I don't know if this is appropriate or not. I'm doing this video, but I have to share it with you. I'm going to do it anyway. It's my video. On the 29th of this month, Doug Campbell with Right Way Options is going to do a class. And the class is going to last about 3 hours, and it will be recorded. You're going to get all kinds of literature to go with it, paper material, plus the recording, yada, yada, yada. And I got to tell you, one, if you've never heard Doug speak, you're missing out. If you've ever not been around when Doug is teaching, you're missing out. If you've never been to one of his trap classes, you're missing out. So I take advantage of it. There's only going to be 30 spots sold. I said earlier today, if we come back, I swear to you, if we come back and say, you know what, this has been a sellout, we're going to add another 10 more classes, I'll say this right here in public, on video, I promise you, we'll give everybody their money back and still do the class for you. I'm guaranteeing you, 30 people is all that's going to be there. Okay? All right, now let's talk about the 3/8 trap. Thanks, like to know, appreciate it. Yeah, Doug's killer at this. I got to tell you, I'm jealous. I really am. He does a great job at this. Okay, so let's look at the 3/8 trap. The 3/8 trap is, let's get rid of a couple things here. Let's get rid of the trend indicator. Let's get rid of the 50 period moving average. There we go. That's the 3/8 trap right there. It's when price is trapped between the T line, the 8 exponential moving average, and the 3 exponential moving average. And that's what we're looking for. It's that simple. Now, I got to tell you, it's the easiest thing in the world. But if you've never done it, if you've never experienced all the things that go with it, which that's what the class is for, but I'll try to do as much as I can right here. It's not as easy as you think, but once you get it down pat, you're going to think, oh my God, how can something so easy make so much money? Or make your trading easy. Some days, you don't make money on every single one. I don't want anyone to think that. You can't. But as far as chart patterns go, helping with entries, helping with stops goes, it's killer. Now, I use the LTA scanner to find these, is what I do. I think that is about the best thing out there. And it's just a sweetheart. And by the way, anybody, if you remind me, well, Malcolm, are you here? Yes, Malcolm's here. I know that Malcolm has got a link for the 14-day trial to the scanner if anyone's interested. Malcolm, maybe you could toss yours out there. I would really appreciate it. But if you'd like a 14-day trial to the scanner, then, well, anyway, 14-day free trial. No, I don't even think they ask for your credit card, honestly. So you'll be, I think you'll be very happy with that. Okay, so this is my favorite trap scan. I've tried playing around with them. I've tried, different little tweaks, and the truth is this one right here is the best. And when you get the scanner, you can load this up automatically. It's not like you have to build anything. They've already live trading alerts have already added it in. So here's this FBHS. Why is my mouse doing that? And I pulled it off here a minute ago. I know it was there. Anyway, we're going to look at more. So what it's looking for is charts that rally up and consolidate back into the trap, like this right here. Now, just because it rallies into the trap and you get a bullish candle doesn't mean it's going to go up, right? There's still a bit of charting one has to do. And looking at this chart, truth is, I could have seen that as a buy. Absolutely. I'd still be in it. I'd still be in it. Still be in it. Still be in it. Right here, I wish I wasn't in it. And right here, I'm glad I stayed in it. So this one's turning out, I mean, very, very nice. This is a buy right in here. And when you're able to look at the chart and you see these chart patterns, multi-bar chart patterns line up with the 3/8 trap, this is it's just a killer trade. And as far as a stop goes, why, I love saying this. It sounds kind of corny, but I truly, truly love it. Somebody that says, where would you put your stop? Almost 100% of the time I come back, well, why do you like the chart? Just ask yourself why you like the chart. For a 3/8 trap, the answer should be because it's trapped between the 3 and the 8. Well, if it closed below the 8, would you be happy with your strategy then? Of course not, because you like it because it's above that line. Now, what we will do, I don't use the T line as the absolute stop. What I'll do is come in here and look for maybe where price action is giving me a better stop out point within reason. For instance, if I was to buy this right now, well, let's, let's say today's candle actually opened up down here. Let's be ridiculous, okay? So if I was to buy this right now, there's no way in the world I would use today's low. That's almost 7.5%. No way I would do that. So I would come in here and maybe find a better place where now I got to delete this. There we go. Where I might put a stop. A couple things I might do is I might look at a 2-day chart. Do I see something on a 2-day chart that would give me a stop out point? So far, I'm maybe liking that hammer right there. 3-day. I think I'm going to stick with that hammer. I'm going to go back to the daily chart. So that might be my stop out point. I might go look at that 3-bar chart. Does that look worthwhile? Or, you can, don't mind what I do. It's your chart, your trade, your money. Where are you going to put that stop? Figure out where you would not like this chart. Keep in mind, you like it because it's in the trap. So you would be, for the most part, unhappy if it came out of the trap. So your stop has got to be in there somewhere. So in a nutshell, the 3/8 trap is simply a chart that has rallied up with a pullback into the trap. right there. And again, I like looking at the scanner. I don't even have to shop for them. Look at now, NOW. Look at FedEx. Look at that, FedEx. And I'll tell you what, go back and look at FedEx. Where could you have bought this? How many places could this have been bought? I mean, do you see what, a trap in here, trap there, kind of in there maybe, definitely right there. I mean, look at all these places that this could have been bought. That would have been a good place. And here we are again, doing the same thing. We're not asking it to do anything that it hasn't already done. Let's see, make sure I get these questions up here. Thank you, Malcolm. I just saw that. Appreciate it. Dennis, Rick, Doug often uses the volatility stop indicator. Do you use that for your stops? I don't necessarily use it for my stops, Dennis, but thank you very much for bringing that up, okay? I'm going to actually bring up, there's the volatility, my volatility stop. Let me make sure that's actually it. Yeah, that's it. Okay. So that's my volatility stop. Now what I'm going to do is I'm going to put the 3 up there so we have the trap. There we go. All right. So now we've got the trap plus the volatility. Okay. Now let's go look at FedEx again. Oh, we are on FedEx. See where we are on the volatility indicator? We're right there, right? And I know what Doug does. I mean, he's the guy that brought the volatility indicator to us. I love it. I don't necessarily use it on my charts, but I want to show you something, okay? I will show you something. So I want to look at my scan here, and I hope I didn't change this one. Oh, I didn't. So what I'm going to do is this scan is put together by a couple of different mini scans that makes the big scan, okay? So let me bring this back over here. And you see what I've done here? The bull V-stop within X% of the V-stop, the volatility stop. So what I've asked the LTA scanner to do for me is look for stocks that's in the trap, but I want them within a certain percent of the V-stop. And you can control that V-stop there. And what I've done is I've set mine right here to 4. Now, you can certainly set it to whatever you want. If you want to set this to be within 1%, you can just change that to 1% of the V-stop. Now, you're certainly going to get less tickers, but, like I say, you can adjust that how you want. Now, I set mine at 4. So let me cancel this because I don't want to make any changes. Yeah, I don't want to make any changes. So although I don't use the V-stop on my chart, you can see that I do use the V-stop. And again, what I'll do, moving pretty fast, take cat, V-stop. So I'm looking for charts that are set up in the trap that's within the V-stop. And I think what I'm going to do here is let's go ahead and bump this down a little. And that'll slow this thing down. Whoops, there we go. Let's slow it down to 2. 2, 2, 2. Now we're going to have to rescan. Let's do this to... So there's 70 candidates that might fit, and I'm using my own watch list. Only about 850 stocks on my watch list, and 70 symbols are candidates. Now let's see what pops up. It'll take a minute to kind of get everything, all the math done here before it starts working. So let's talk about the 3/8 trap here, and here I've closed them all out. Texas Instruments. Take a look at that. So here we have a breakout, a rally up, and we're back in the trap. So Andy asked what is a 3/8 trap, and there you go. I think I've explained that 3/8 trap, and here's the volatility stop. So if you do use that volatility stop, you can see that we are right there. Let's check a couple of these, make sure we're close. STE, look at that volatility stop there. Take a look at SO, volatility stop. D. See now when I'm looking at charts and I want to make that final decision to buy, I don't have to be wondering, well, is that chart too far away or even underneath the volatility stop? We have it set up where we're within 2% of the volatility. That's what I just changed it to, is 2% of the volatility stop. Which makes it really kind of cool, because now I just have to sit back and wait till I start getting those alerts, and I can go find the chart that I actually want to trade, the one that looks the best to me when it's time to make that decision. Let's see here. And thanks again for your question, Dennis. That was good. I would not have thought to mention that. Appreciate it. Let's see, Reggie, Rick, take a look at the TSM. TSM. There we go. 3/8 with close to horizontal and angle line support. Oh yeah, here we are with support, angled. So here's what he's looking at right there. I mean, that's what we're looking for. That's nice. So for me, see, I'm not a buyer like this. I'm not going to buy on this candle. I want to buy when I see traders coming in. So what I will do is, if I like this chart, what I will do, I was come over here and bring up my hot list, and I'll simply go to my list itself, and then I will add it, TSM. Okay, and let's see, it'll save it there. So now when I see, and I work on new day highs or new hourly highs sometimes, everything about my long trading is about highs. If it's not making a high somewhere, I'm not interested. I want to be with the buyers. I want the buyers to be interested. So when I start seeing something like this where FedEx is showing a new high, and when it shows up, that means it's a new high, or Mosaic or L Brands, when it starts making that new high. Now that doesn't mean if we go look at the chart, it's actually pulled back. This just says at, I don't know, do I even have time? Yeah, the time and date, it'll say when it made that new high, and at this exact moment, it may actually be off that high just a little bit. But when I start seeing that move, that's what I'm looking for. So if I go look at FedEx, that's the kind of candle that excites me, not a candle that has, a wick bigger than the body. Here's LB coming up. Okay? I would be very interested in LB here, and look at that V-stop here. Okay, whew. Anyway, I hope that answers some of those questions there. I really do. Let me move this back. Well, yeah, no, yeah, no. Yeah, let's move back. So let's see here. Another question. Twinkie, I may have missed it and can't find my notes. Is the 3 EMA high and the 8 EMA close? All right, let me explain that. Okay, Twinkie, that good question there. The 3/8 trap is that out of my way. The 3/8 trap originally was the 3/8, the 8 close, and the 3 close. Many traders still use the 3 close. I have chosen to use the 3 high. I think there are traders that use the 3 high versus the close. The thing here is for you to make a decision. It's not one is better than the other. It's you make a decision and you have your reasons for the decision you make. So it could be either way, but originally it was the close. I have just chosen to use the high, okay? And somehow one of my moving averages got changed to a simple instead of exponential. All right, let's talk about that for a second. Would that be a bad thing? Would it be a bad thing if you used simple moving averages versus exponential? No. Guys, what we're doing with this is we're taking an idea and we're creating a chart pattern is what we're doing. And we're telling the scanner, or however you come up with these charts, you're just saying, show me the charts that fit this chart pattern. Why couldn't you make a 3/8 trap out of simples? Why couldn't you? I don't know why. I mean, it makes sense to me. Why couldn't you make a 8/17 trap? I have one. Why couldn't you have one? Why couldn't you make a I don't know, a 3 and a 5 simple maybe? You see, all we're doing is we're taking the thousands of charts that's out there and we're drilling it down to a specific chart setup. And then we're trading price action. That's all we're doing. That's all we're doing. So there would be no harm in that. Now, I have personally found that this, I think, is my favorite. But, you know, there are days when this thing doesn't give a squat. Not too often, but it happens. But another type of trap might give you a good one. BB, so you can use the 820. Absolutely. And that would be a good one, BB. I have that one. Actually, BB, what I have is the 8 here. What I've done is I've said trap this candle, and that's what you're looking to see, the 3. Whoa, mine's set on, doggone it. I'm going to have to fix that here. Huh. I have no idea why that is set on close. No idea. Huh. So anyway, somewhere around here, I've got another scan that says I want to trap this candle, the 3 and 8, or, and I've created another one, so there'll be another line down here that's the 8 and 20. And then you come over here and check or. So it's either or, you have to check the two boxes. Everything else will stay the same. Or. And it gives me either the 3/8 trap or the 8/20 trap. That kind of upsets me there. Kind of makes me a little aggravated, actually. Okay, it stayed. All right, we'll see. All right. Let's see here. I know there was another question I wanted to get to. Here we are. Like to know, I have a problem understanding how you make money, say with a January call on low and the break-even point is so high. Let's look. And I don't know what you mean by break-even point. I do not know. Let's see. Anybody want to throw out what you think low can go to? First person that tells me something, where can low go? 200, that was the first one. Wow, okay, that's up there. 200, all right, no problem. So how can I make money on this, right? Is that your question, right? I want to make sure I read that question again here. I have a problem understanding how you make money, say with a January call on lows and the break-even point is so high. I'm a little bit baffled that your break-even point is so high. But let me show you how I'm going to make money at it. Supposing I buy the stock right here, right? Well, I've already been told it can go to $200. That's 13.8% on the stock 13.8% on a option. You know, if it's a stock, the option price is going to be close to 30%. Let me see. Let me think about this now. Let's not complicate it. So let's say I spend $2,000. Let's try that again. Let's say I spend $2,000 on this trade times, what did I say, 30%? I don't know. That's how you make money. How complicated is that? How does it get any more complicated than that? Does that answer your question? Does that make sense? That's simple. I'm going to run down and make sure you didn't type anything, because good question. You're very welcome, sir. Thank you. And seriously, if that did not answer your question, please let me know, because that right there in a nutshell is exactly what I do. I mean, to the penny, that's exactly what I do. Let's see, you said for some reason I thought it had to go higher than the break even to make money. No, sir. You know, I'm the world's worst. I had such a negative outlook on options, and for 30 years. I mean, I badmouthed options. So for all you option traders, please, I'm begging for forgiveness right now. How wrong I was. And it's just because I tried to take options in the whole thing. And if somebody said, you know, if somebody said, I want to be an option trader starting tomorrow, and you went to some big fancy option class, you would leave that class and you wouldn't trade options. I'm telling you that right now. Because it would blow your mind up. What I did, I'm very serious. You can ask him when he's around. I think he's on his way back from the doctor's office now. But you can ask him. I called Doug up. I have a bat phone to him with Skype. I got on Skype, said, hey, Doug, I'm ready to do this. I want to open up a small account. I want to only trade options. What can you help me with? Serious as a heart attack. And he said, well, Rick, because you are so good at picking direction, I would suggest you stick with, starting out anyway, with simple puts and calls. All you're doing is betting on direction. That's all you're doing. It's like buying a long stock and buying a short stock. That's it. He explained a few things to me. Zippity-da-doo. A couple days later, I know I got a hold of him because I had a couple other questions. He answered my questions, and here we are today. That simple. So options can blow your mind up. It can rot you if you're not careful, if you try to take it in too much at one time. But if you take it one step at a time, very simple to start with, and then move. If you want to get fancier, you sure can. But start with something simple to understand it, and then you can move into it. But like to know there, it's buying puts and calls is just like buying a stock, or a stock long or a stock short. You're betting the stock's going to go up, or you're betting the stock's going to go down. Simple as that. Now, let me caution. Let me caution. If you can't make a little bit of money or be somewhat consistent on being right with a stock trade, the options is not going to help you. In fact, if you lose money trading stock at a very slow pace, if you start trading an option, you're going to lose it much faster. So you have got to be right on your chart. You've got to have a good base foundation on charting. Okay? All right, I know there was maybe another question up here. Let me jump up and ask. Let me see. And I'd like to know, thank you for your question, by the way. I appreciate it because that's something I love to talk about. because I love to talk about it because I'm kind of like a born again, you know what I mean, options kind of person. Somebody that badmouthed it, just totally. I mean, I was against options because I didn't understand them. Okay, and that's the truth. And now, I don't pretend to understand everything. In fact, I've made it a point not to learn anymore. I don't want to. I'm very, very happy trading puts and calls. Now, I shouldn't say I don't want to. You know, someday maybe I'll reach out. Okay, but right now, I just trade simple puts and calls. Okay. Let's see. Bob is asking, can you go over the settings on your 3/8? Bob, ask me again down below and on where, like the scanner, where, you know, what settings, I guess. So the 8 EMA is a close. Just clarifying. Yes, Lee, it is. It's on a close. Yeah. Richard, hi. Can you please share the properties of your hot list window? Sure. On LTA, is it for the daily new highs only? Let's go look. You're going to be surprised, I think. The only thing I want is a bull trend. So if I put a chart on this list, and if it goes against my bull trend, it won't show up. So it has to be a bull trend. And down here, I just have new highs and new lows checked. This is a generic. In other words, I want to know everything I can about this chart. It's on the hot list. This is like the overall, okay? There's only 52 results. There is only I don't know how many. I think there's like 80 stocks in this right now. But it has to be in a bull trend, which means that's the 34 EMA trending. And I only need or want to see a new low or a new high. That's it. Very simple. Now, what I've done with the trap is it's the exact same hot list. I have just simply set it up as a trap. I want to trap this candle. So no matter what I put on the hot list, say 2 weeks ago, as long as it stays above my trend, it'll stay in the hot list. And notice I have the trend here as well. Doesn't matter whether it's above the trap or below the trap. When it comes into the trap, it will alert me. And there are 8 possible candidates right now. 8 possible candidates. Okay, let's move this back up there. Thank you for that, by the way, Richard. Appreciate it. Oops. There we go. It's Bowler Band, basically okay. I'm not sure what that's for, Rickster, but okay. Yes, 820 trap can be used. Hi, Emily. If you would look at Ford, sure thing. I'm telling you, buy Dodge. No, I'm kidding. No, I'm not kidding, actually. If you look at Ford, it is in a trap right now. Yes, ma'am, it is. Right now on D. Right now on D. I'm not sure what D is. Would you wait? Oh, on the daily. You're right. Would you wait until it passes higher through the mid of the previous down candle, or just buy the candle right now? You know, when you have an absolute answer to that, let me know, will you? I'm not sure that I have an absolute answer. Okay. Now, I'm a bit freer on my trading. In fact, the other day I was called a cowboy by somebody, a good person. They were not saying anything bad. You know, what is it better to buy it now, or is it better up through part of the previous candle, or is it better up here? There are some things that I don't know that can actually be answered. One chart you might look at, even if you took Ford this year, maybe on this year, August 15th on 2020, maybe you buy it here and it just starts moving up. Let's just say something weird happens, and on August 15, 2021, we're back in the same place. And maybe it doesn't, which means you probably wish that you waited until it got about halfway above the previous candle. We're splitting hairs is what we're doing, okay? Now, I'm going to clean all this off here. Let me say this to you. This is a buy area. You buy wherever your little heart desires. And again, I mean that in a way like, you tell me when you figure out the best way to do it. Is it better to wait till we crawl over, 765? Is it better to wait till we crawl over 785? Is it better to buy it now? That is a $64,000 question I wish I had a 100% answer to. Let's go to a naked chart real quick here. All right, let's get rid of this right here, and let's just put lines up. Now, this top, I just keep staring at it. It just keeps coming up in my eyeballs here. Okay. Now we're going to put a trend line, and we're going to take this low right here, and we're going to go to where we are right now. There you go. So, based on this chart, and keep in mind, it's about an area. An entry is about an area. It's not about an exact point. We have broken out of this resistance, yes. We have tested, yes. With success, so far, yes. So, you want to buy now? Is it worth, whoops, hang on one sec. There we go. Is it worth a 2.75% risk? I don't know. That's something only Emily can answer. If you wait till it goes up to 768, I don't know where you're going to put your stop, but if you put your stop down here where it broke out of support, all you've done now is you've increased your risk to 3.8%. Are you going to wait till it breaks out? Okay, I don't have a problem with that, except it just broke out. So are you going to have the same battle? It just broke out. That's just what it did. Or are you going to wait till it breaks out here? So I think in this conversation, I think I would like to end it with trading is risky. Simple as that. We can only trade probabilities. I see a chart here that has clear resistance, and this is resistance, okay? I'm not looking at this top. I'm looking at this right here. We have a chart that has broke resistance, settling down on support. We're putting on a pretty good candle today. Is it worth a buy? Or is it worth a buy on follow through? And that's where I'm going to leave it. Somewhere, like I said, when you figure out the perfect, you let me know. Because I don't have a perfect. After talking about this and looking at this chart, I would say for me, my best entry point would be in this area right there. That's what I would like, because that would show confirmation on this candle. And I do not believe I have to be in early to make money. Thank you, Emily. That was a great question, and I love talking about it. Thank you. Okay, I've got a question here from Julie, and then I need to get this recorder turned off, and then we can keep talking. Julie asks, what is the alert scanner you use? And that's this right here. We've been talking about it. So, Julie, you're listening out there somewhere on YouTube or wherever. This is what we've been talking about. And the LTA scanner to me is, if you're in search of an edge in trading, this is it. If you're in search of, you're making money, but you want to make more money and you can't figure out how to do it, I think this is it. The scanner, it makes life easy. One, I don't have to be filtering through charts all day long. I don't have to be looking at hundreds and others charts. I can sit here and be talking to you, and I can place a trade and just never miss a beat, because I don't have to stop and look at charts. They just pop up like this. if you use TC2000 or Thinkorswim, and there's one other one, TradeView maybe, it can be set up so you can just click on the ticker symbol and it changes the chart for you. Which that's just a side note, but it's a cool thing. You don't have to have it. So the point is, it shows me charts that are moving, are working at the right time. And the right time is when I want to see them. So, like I say, we've been talking about that all day, so I'm not going to spend much more time on that. So, Julie, thanks for the question. Again, if you're looking for an edge to trading, this is it. All right, I've got 2 more questions. If you guys don't mind, let me get these finished up, and then, like I say, I can turn the recorder off. We'll be just a little bit over an hour, and that'll be just about right on time, okay? Paul asked me about the Trendicator for Thinkorswim. And the Trendicator, let's come over here, Trendicator, there we are. Trendicator, for those that don't know, is simply, whoops, wrong one. Put that back up. Let's get rid of the T-line here. There we go. Simple chart. The Trendicator is simply these dots. That's all it is. It's the red dots and green dots. I have mine set to the 17 exponential moving average on the close, if anyone's curious. You can set it to anything you want. It can be the 20, it can be the 50, it could be the 200, it could be the 2 whatever moving average you want. Okay? It's really easy to set up. Now, I can't physically tell you how to set it up on Thinkorswim, but if I'm going to stop the recorder just for a second so it's not running, and then I'm going to come back and I'm going to post a code out here in the room for you, and then I will post that code also down below in the chat of the YouTube, okay? So be right back. Okay, we're back up and running. So I posted the link in the chat, and I will post the link in the text in the YouTube. And Byron said that he posted it as well. Thanks, Byron. Appreciate it. And by the way, Byron, I stole yours from last week. You posted it last week, and I stole it from you. So, thank you. I've got. Let me continue to talk about the Trendicator just a little bit. Now, I think trading requires rules. Now, this is where people get turned off a lot when we start talking this, because there are a lot of traders, to hell with rules, just give me the stock that's going to make me money. You know, I can give you a stock that's going to make money. I can give you a stock that I'm going to make money on, but I would be willing to bet you that you lose money on it. And that's because you don't have rules. Doesn't matter whether I make money or not. You got to have rules. Byron there could put out a stock that he might make money on, and if I follow him and I don't have rules, I doubt I will make money on it. I know that sounds crazy, but it's the truth. So every trader must have some sort of a rule somewhere, something, okay? Here's a rule I use when it comes to the Trendicator. First of all, I never want to buy long if the Trendicator is giving me red dots. I don't care what the candles are looking like down here. You could have a candle like this, gaps down, and it could be a belt hold like the mother of all belt holds. I don't care. If it is red, I am not interested. However, I might put that on my watch list for sure. And then when it breaks out above these red dots, it will turn them green, and then I will look for my buy setup, up and back, just like that. But I think a very good rule to have is never buy long when the Trendicator is red. Only buy long when the Trendicator is green. And I'll leave the Trendicator alone right there. Oh, Karen, and this is the last one I have. Somebody on YouTube named Karen asked me, what shows, and I know what this is from. A couple videos ago, I talked about when a stock shows me strength, when a stock shows me that the buyers are coming in. And I remember I don't remember the exact video, but it was just a few days ago. And Karen asked me this question: what shows you that the buyers are stepping in? Well, let's take a look. Let's go back to Ford here, okay? And let's get rid of that. Get rid of that. There we go. So we can clearly see that this is a bearish chart right here. And we can clearly see that the chart has turned bullish, right? Now, we're not in it right here. What I want to do now is I want to see a chart that has pulled back, okay? So let's get rid of that. And now I'm going to put this line up right here. Put that line up. So I want a stock that has rallied and pulled back, but I want to buy it in the pullback when I see buyers coming in. Now, I'm going to see that through the scanner. So the scanner will tell me buyers are coming in. If it's not on the scanner, I don't ever look at the stock. It's not anything I'm going to trade. Now, as far as the chart goes, let's look at the chart here. So if we look at this chart, we have a line drawn, a seller, sellers, sellers, and the reality is here we still have sellers. We have a lower low. We have a low, a lower low, and a lower low. There's still sellers here. Not as many, and buyers are definitely stepping in. We can see that on the chart, right? Now, don't ever be afraid to put lines on your chart, by the way. Put all the lines on you want. You just trust me, that's a good thing. So what I want to see is that pullback. I want to see buyers stepping in. We can clearly see that. So now this might become a buy. Now, each chart is going to be a little bit different because we look at the price action here, and the price action might be shaped just a little bit different. And I do believe maybe the best time to buy this is when I see follow through above today's candle. That will show me that those buyers here are still there, and then there are some more coming in. That would also put us over this downtrend line. So buyers stepping in is when you see dark candles or red candles turn green or white candles turn, white. When you start seeing that happen, that's when buyers start stepping in. Let's look down here for an example. This looks great. I like this chart, and I'm gonna kind of, I think I'm gonna go with right there. I see buyers stepping in, but I see more confirmation above all that resistance area. Resistance, 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 resistance. Right there. That's where I see a better buy if you're going to buy a chart like this. Rather than down here, I don't want, because we're underneath the red dots, I'm not going to buy. If we close up, the dot turned green, and I see confirmation, especially toward the end of the day. If I see this chart up there like this at the end of the day, that gives me the warm and fuzzies that, hey, this thing just might work out from here. So I'm looking for that confirmation. And in this case, over that trend line would be it. In this case, I think I would like this over the trend line as well. Believe me, I can also see buying in here, okay? I'm not trying to say that that's the ultimate, but this is a great buy in this area as well. It's very clear that buyers are stepping in right now. They just haven't broken our trend line yet. Okay, that is the questions. Thank you for all your help here. I appreciate it. I really do. Turns out the video is about an hour and 14 minutes long. I'm going to say thanks to everybody. Thanks for watching the video. Thank you for being here in the room. Give me a minute. I'll be right back. Okay, folks?